Hey guys, Joe Neighbour, going to run through some indices with you all today. Just waiting for this to finish loading. Okay, let's get into it. Okay, starting off with the FTSE 100 today. Got the charts up here. Not a lot really changed last week. It was much more of the same, more choppy price action. Let's start off with a weekly chart here. So what we have is this bullish channel, which I've been highlighting for the last few weeks. And we've got this 61.8% retracement from these highs here on the 29th of July down to the lows there on the 30th of September. We've had a couple of attempts at trying to overcome this level at 7452. Last week we had quite a large reversal candle that looks to me like a gravestone doji, which often can signal the death of a move. So that was very bearish indeed. We've opened this week on the front foot, but already giving a little bit back, as we'll see on the shorter term timeframes when we take a look in a minute. Overall, expecting more of this sideways chop, particularly while we wait for the outcome of the general election, which is on the 12th of this month. So more campaigning, more political uncertainty expected, and therefore no great shakes expected in the FTSE 100. We've also got the trade war between the US and China, which is impacting things with the movement in sterling dollar. Any positive news for the trade war will send dollar higher, which is often bullish for the FTSE 100, and vice versa. If there's any negative news with regards to the trade war, that will be bearish for the US dollar, sending sterling higher, which is bearish for the FTSE 100 index. I'll go into reasons for that another time, but this is the daily chart that I've got here. I've been monitoring this head and shoulders, or potential head and shoulders top, for a number of weeks. It still looks like it's possible. We've had a rally up to these resistance levels here, a cluster of resistance forming. We've got this key low here from the 25th of July. We've got this 61.8% Fibonacci retracement level, and we've got this previous high here from the 27th of September, all acting together to combine to form a resistance level, which the FTSE at this stage has been unable to overcome. So while that's still in place, I think there is scope for a move lower towards this neckline down here at 7,000. If we break this neckline here, then we confirm this head and shoulders top, which I think would be exceptionally bearish for the medium to long-term outlook for the UK benchmark index. Taking a look at the intraday charts, this is the 4-hour chart. Again, just a really zoomed in look at this range that's formed here. We've got this cluster of resistance, which you can see here, sort of number of levels that are preventing the index from moving higher. I'm going to take a look at the hourly chart. And what I posted last week, at the end of last week, was a bearish head and shoulders that had formed on the 60-minute chart. So we broke below that at the end of trading last week, saw a real quick move lower, but we've seen quite a substantial move higher in the opening hours of the market today, up to this resistance level here that I've got at 7394. And also above that, we have this 78.6% at 7404, which is from this high that we saw on the 29th down to the low that we saw on the 29th after hours. So we're looking at head and shoulders patterns. I'm always conscious of the throwbacks to the neckline. I think just sort of hitting the neckline as it stands is not always the best way of doing it. I'm quite happy often to give it a little bit more room to overshoot. The 78.6% level is kind of where I draw the line. If it starts to move above that, then I think that the head and shoulders pattern has failed. But here we've got from the so the highs there that we saw on Friday to the lows that we saw on Friday, we've stood just below that 78.6%, and we are heading lower. Whether or not we can sort of break down below here at 73.70 remains to be seen, but I think the immediate target on a daily basis, if this sell-off continues, will be down here to 7337 to retest those lows that we saw after hours on Friday. So overall, I'm still on the sort of bearish side when it comes to the FTSE. Obviously, a lot can change with regards to the political uncertainties and obviously what's going on with the election. We've got a lot of data due out this week as well, but my bias is for more downside in the FTSE 100 in the coming days. Now, just moving on to the DAX. all still looks pretty rosy here on the DAX. This is the weekly chart. We've got this bullish channel here that price continues to trade within. We keep knocking up against the upper end of the channel, and seeing prices sort of resist there. We had this doji candle that formed on the week beginning the 18th of November, and we've got this key high here from the week beginning the 22nd of January, which I expect could be tested in the coming weeks as we run up into Christmas. That's at 13,602. So overall, it still looks pretty bullish on the weekly outlook for the DAX. On the daily, again, we've got this channel here. Some evidence of price stalling a little bit. As you can see here, it's sort of jumping about, but not really making too much ground either way. We had this this doji or inverted hammer candle, shooting star candle, which formed on the 19th of November, but price is recovered back up to that level and sort of trying to test the high of that candle at 13,379. So that remains to be seen whether that will happen. Again, looks pretty bullish on the daily chart for the DAX. This is the 4-hour or the 60-minute chart. So look at the 4-hour first. So on the 4-hour, I've got this kind of expanding wedge, which again just highlights the range and the choppiness that we've seen in the index. We had a burst up higher this morning on the back of a number of positive PMI readings from China and from the big economies, France, Germany, and UK this morning, and that's pushed the index higher. We're up at this 78.6, which is 13,307. Which acted as a resistance level earlier in the week, so last week, but it looks like we're having a go at trying to break above that. We did have a reaction higher at 13,338, so it remains to be seen whether or not we can push on above that up to test these highs that we saw on the 19th at 13,380. Overall, I think the outlook is bullish for the DAX. I attempted to sell it today at that 78.6 just because there was no real clear level to buy it at the moment, so I think I went for the fading option to try and sell the DAX today, but overall it does look quite bullish, so quite a low conviction setup on that short trade on the DAX today. Let's take a look at the US markets. Again, there's not really much to say here. It's all very bullish. We're all trading around all-time highs, and that can be seen across all the markets, the NASDAQ, the S&P, and the Dow Jones. Quite a trading session last week because of the Thanksgiving break. And also we tend to see a lot of participants, or certainly people within the market, take a holiday on the Friday and do all their Christmas shopping on what is Black Friday. So when you get markets that are lacking in volume, you tend to see them drift in the direction that the market has of its prevailing underlying trend, and of course that's bullish. So we've seen the grind higher to new all-time highs on the NASDAQ last week. Looking at the daily chart, not much else to say really. It's pushing higher. We saw a little bit of a dip sort of on Thursday and Friday, but it seems to have been engulfed by today's gains, which is already up 0.4% on the pre-market. On the 4-hour charts, there is some potential for it stalling around here at these highs that we saw last week, but you know, I can't see myself trying to sell that at this stage because it's just so strong overall. I think if we did see a break below these lows here at 8,400, I think, why isn't that working? Come on, 8,400, then there is scope for a pullback, a bit of a deeper pullback, but you know, I think the pullbacks are going to be quite shallow and not last very long. So if you're a day trader, there is a potential, I think, to sell a break of 8,400 and maybe target down to 8,307 in the very short term, but clearly the underlying bias is very bullish there. And it's the same across the board. Let's have a look at, I mean, these charts will all look pretty similar. This is the Dow Jones. We are pushing up towards new all-time highs pre-market, having hit them last week. A little bit of selling towards the end of the week on the lack of volumes, but nothing to worry about. We saw this bearish outside day that posted back on the 19th of November, and clearly didn't. So just flicked across to the S&P there. Saw some mild selling, but you know, we've come roaring straight back, so no concerns there about the strength of the trend. This is the 4-hour chart trading in this bullish channel. stalling a little bit around the highs that we saw on the 27th at 28195. If we break above that, then we're going to keep heading higher. You'd have thought. In speculative selling, I would be looking for a break of 28041 to initiate some selling, but again, you're probably only looking for it back down to the bottom end of the channel and some support around there at 27900. So risk reward isn't particularly great, so do be careful if you're trying to call a top on that at the moment. Let's look at the S&P 500. Again, weekly chart, very strong, trading up at all-time highs. In fact, now on the S&P, clearly no signs of selling. Pretty much engulfed all of the losses that were seen on Thursday and Friday last week on the lower volume action, and looking positive once again. This is the 4-hour chart, bullish channel, potentially a wedge, but again, very strong, making all-time highs. No concerns there for me, and certainly not looking to sell anytime soon. I think if we saw a break of 31.39, then you may see a retracement back down to 31.20. Again, risk reward isn't particularly great, and I think it will just be a very shallow correction before the dip continues to be bought. Obviously, this could change with regards to what goes on with the trade deal, but it looks like phase one is going to be sorted in the coming days. So that pretty much concludes the roundup of the major markets that we look at. We do a little bit on the SA40 and the CAC 40, as well as some of the Asia Pacific markets, such as the ASX 200, Nikkei, and Hang Seng. But I'm going to leave it there and wrap that up. Hopefully you've enjoyed it and it's helped you set up for your week ahead, and I'll catch up with you all again very soon. Take care. Bye-bye.